And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. The next round of filings for spot Ethereum ETFs with the SEC due today, part of the ongoing regulatory process that's required before spot Ether ETFs can be launched. But approval could come as soon as this week or next. Let's talk about it with Matt Hogan from Bitwise Asset Management, which is one of the applicants. Also joining us remotely, Nate Geraci from the ETF Store. So Matt, you filed an amended S1 for Ether ETFs last week. Other amended S1s are due today. I think Van Eck also filed. How much did you need to amend your application, and when do you think approval might be likely?
Yeah, great questions, Bob. I can't speak beyond what's in the filing, but I think if you look, the amendments from the previous one were relatively limited, and that tells us that we're getting closer to the finish line. I think what you're hearing about this week or next, that makes sense to me. This has been a very fast process. Remember, only 2 months ago, no one thought we were going to see these ETFs. Now it seems likely we will, and we'll see what the response is.
So just for people not familiar with this, the fact that the amendments that you had, the SEC filed comments in response to your S1, and you've now filed amended comments. The fact that the changes you had to make were minimal is a good sign, right? For people who don't understand this process.
That's right. It's like a fine-tuning process. Sometimes it takes one amendment. For the Bitcoin ETFs, I think it took 6 amendments. We're on amendment 2 or 3 on Ethereum, but we're getting to the end of the road is what it looks like based on the scale of the changes. You can't guarantee anything. You could get a curveball at any point, but it feels like we're getting to the sharp end of the point.
You know, Nate, you've been commenting a lot about crypto. It's a very interesting moment for crypto enthusiasts. Ethereum is, I think, 25% off its March high. I think Bitcoin is similar, maybe 23% off the March 52-week high. Any thoughts on what's driving crypto prices now, and is the spot Ether ETF coming at all playing into the prices?
Yeah, it's really interesting because if you look at the spot price of Ether, it's actually down over 20% since those 19B4s were approved on these spot Ether ETFs we're talking about. I think that just shows some general weakness in the markets right now. And as I think about spot Ether ETFs coming to market and what the demand might look like and how that might impact the spot price of Ether, if you look right now, the underlying spot Ether market is about 1/3 the size of the spot Bitcoin market. And I think that's a decent proxy for what to expect from spot Ether ETFs, about 1/3 of the demand of Bitcoin ETFs. If that happens, we would still be talking about one of the most successful ETF launches ever. Spot Bitcoin ETFs were the most successful ETF launch in the industry's history when you take into account the 10 or 11 ETFs that came to market viewed cumulatively. I think spot Ether ETFs could be the second most successful launch ever. And if that's the case, I would expect that to drive some demand and potentially positive price action.
All right, Nate, I'm having a little bit of a sound problem hearing you, but I want to just turn to you, Matt. One thing is, I think for sure here, the launch of a spot Bitcoin ETF, this spot Bitcoin ETF has been a big success this year. In the first half of a typical year, maybe we'll put up the data here, most of the inflows into ETFs are typically plain vanilla passive index funds, the S&P 500 ETFs, NASDAQ 100 ETF. That's still true if you look at the data. Most of the inflows are passive ETFs, but 2 of the top ETF inflows this year have been into spot Bitcoin ETFs. So the iShares Bitcoin Trust, I think, is number 4 there. 1, 2, 3, 4. Maybe iShares Bitcoin. Yes, there it is.
That's right.
17.7 billion. And then the Fidelity Bitcoin Trust is number 8. So for those of you who don't know, folks, that's pretty impressive for a niche product to be in what may be a record year, to be in 2 of the top 10. I'm trying to figure out what's a method or way to look at this. That seems successful to me.
I think it's a massive success by any measure, Bob. If you look at that iShares product, it's the most successful ETF launch of all time. Even if you look at Bitwise's product, the Bitwise Bitcoin ETF, BITB, we're growing faster than the gold ETF when it first launched in 2004. By any measure, these are the most successful launches of all time. And that's why I think many people, including Nate and myself, think there's going to be significant demand on the Ethereum side if we see that as well. So these Bitcoin ETFs were huge.
Well, I'm
people
trying to
want
figure out how to
crypto
judge this. I mean, for example, this is a niche product, okay? So we're dealing with crypto ETFs. In 2016, 17, 18, we had a whole rush into tech ETFs, for example, specialty tech ETFs like cryptocurrencies, and we had significant inflows back then into these specialty tech ETFs, and it was about the same, right? I mean, I'm trying to figure out, is the numbers indicate that this has been successful by any measure, right?
Yes, I think that's what the numbers say. I think what you're seeing is this sort of the birth of a new asset class. I think the right analogy to make is back to the original gold ETF approval in 2004. And the thing I find interesting there, which people forget, that was one of the most successful ETF launches of all time. It pulled in $1.5 billion in 2004. But guess what, in 2005, it did more than $3 billion. In 2006, it did more than $4 billion. In 2007, it did more than $5 billion. It kept building year after year. And that's what I don't think people realize about these Bitcoin ETFs. This was a huge first half.
Yeah.
But I think the second half could be bigger.
But
and I think next year could be bigger than that.
right, but you're using the gold ETF as a model. Is that what basis do we have for believing that's going to happen?
Yeah, well, if you think about gold back in 2004, it was a niche commodity that wasn't in mainstream portfolios, and it was hard to buy. You could buy gold miners, or you could buy closed-end funds. That's the same with Bitcoin. It's a relatively niche commodity. It's not yet in mainstream portfolios. It was hard to buy. But all of a sudden we get a Bitcoin ETF. All of a sudden Larry Fink's talking about Bitcoin on CNBC, and now it's moving into the mainstream. And I think that's going to be a multi-year story.
Nate, does that make sense to you? Is the gold ETF launch in 2004 analogous to what we might be seeing with Bitcoin and eventually with Ether?
Yeah, so I do think that's the case. And just to add some context around the debut of spot Bitcoin ETFs, if you look this year, 300 new ETFs have come to market. The top 4 in terms of inflows are all spot Bitcoin ETFs. And again, I just don't think there's any way to categorize the first 6 months of spot Bitcoin ETFs existence as anything other than a monumental success. There's been about 15 billion in net inflows into this category. And overall, assets are north of $50 billion. I think it's remarkable. And just to dovetail on what Matt is saying, I'm pretty bullish on demand moving forward. And the reason is very simple, which is that financial advisors and institutional investors have really only begun wading into these products. You have to remember, many advisors and institutional investors are very rigorous with their due diligence processes. They're going to crawl before they walk and walk before they run. And I think this cohort of investors is actually still learning to crawl. But as they get more comfortable, I think we're going to see a meaningful uptick in demand for these products. And again, I just don't think there's any way you can categorize what we've seen as anything other than a monumental success.
So Matt, spot Bitcoin, we've been talking about the flows here. We have about 15 billion in total inflows. This gets a little complicated, folks, because Grayscale had some outflows, but we've had altogether about 15 billion in inflows since launching 5 months ago. Here's the inflows overall. By any standards, this looks like a pretty successful launch for a niche product. There you see Bitcoin Trust 18.4, and there you are, Matt, 2.3 billion there. Grayscale, as I mentioned, had a pre-existing fund that converted to an ETF. That saw some outflows, but that was more than offset by these significant inflows into the other major players like iShares, Fidelity, ARK, and Bitwise here. So total assets now is 51 billion. Of course, this includes Grayscale's numbers as well. And again, I heard estimates that people would be delighted if we got $5 billion a month in the very beginning back in January, and we seem to have exceeded that.
I think that's right, and what's even more remarkable is the flows have been steady, whether Bitcoin's price has been going up or going down. There was this worry in the market that these would be weak-handed buyers, that they would panic the first moment Bitcoin's price hit a period of volatility, which of course it always does. But guess what? We had flows in Q1 when the price was going up. We've had flows in Q2 when the price is going down. We've had flows in the last week. What is happening again is people who are starting from zero are starting to build positions in Bitcoin. And as Nate mentioned, they walk and they crawl and they walk and they run. And we're just getting to the walk and the run part. So I really think that consistency is an important part of this flow story.
Yeah. Nate, take out your crystal ball here. What can we expect from the spot Ethernet launch? So what would be a victory? So if we had 25% of the flows of Bitcoin, would that be a victory in 3 months? Would a 50% be a victory? I mean, how are advisors and investors going to compare this to Bitcoin ETFs?
Yeah, I think a victory would be if we see the demand for spot Ether ETFs be about a third of what we saw from spot Bitcoin ETFs. I just go back to what the current market cap is of the underlying. Now, there are a couple of potential headwinds that could limit demand to a certain degree, at least initially. One would be the crypto market that we talked about earlier. It hasn't performed well recently, and perhaps that negative sentiment blunts demand initially. The other thing is that these ETFs won't offer staking initially, and there's a case to be made that perhaps that pulls some demand away from spot Ether ETFs. But again, I would say both of those potential headwinds would be shorter term in nature.
Staking allows you to make money essentially off of your investment. And the SEC specifically excluded that. Why did they exclude it?
I think it's an added complication, and the SEC itself may have some concerns around whether staked ETF qualifies as a security or not. But if you look at the Ethereum market, more than 2/3 of all ETH out there is unstaked. Most people investing just want to get exposure to this asset, which is up thousands of percent over the last 5 years. The staking would be icing on the cake. We're not getting it in this V1. I think we and others hope that in the future we'll be able to add it to ETFs or add ETFs that stake. But this is a great first step.
Has it been settled that Ether is a security or not a security?
Well, you don't get a pronouncement. That's unfortunately not the way regulators work. I think a lot of people take comfort in the fact that we are getting or at least we hope to get a regulated ETF. That would remove some of the regulatory obscurity around Ethereum and move us forward. But you never get a firm pronouncement that it is one thing or the other.
And the market cap of Ether versus Bitcoin is about 25%?
Yeah, it's about 25% to a third. Yeah, that's
so Nate, that was the point Nate was just making, that if 25% of the volume would be a victory, would be on par with Bitcoin's market cap then. So that's a reasonable number, 25%?
That would be a huge success. I do think we will get there, but to contextualize that, remember that the Bitcoin ETFs were by far and away the most successful of all time. The number one ETF before those gathered $5 billion in 1 year. So if we get 5 or 10 or $15 billion in the first 2 years of these Ethereum ETFs, that is a massive runaway success. Now, I do think that's where we're going. Could take a few months to build, but it would be both achievable and remarkable, and I think would set up Ethereum to do very well.
Yeah, and of course, Ethereum is essentially smart contracts too, and it's a different technology really than Bitcoin. I find that personally, I know we haven't talked about that, but I find Ethereum far more interesting than Bitcoin as an intellectual concept.
I think a lot of people do, and I think that's going to drive demand. When people say Bitcoin, they think digital gold. When they say Ethereum, they think tokenization, they think stable coins, they think DeFi. If you want to invest in those things, if you want to invest in the growth of tokenization, Ethereum is like the picks and shovels play. It underpins all of it. You can't have tokenization today without Ethereum. You can't have a robust stablecoin market. Yeah. And I think that is going to appeal to a lot of people.
Well, this is what excited me, because DeFi is much more exciting to me than the idea of a new currency created ex nihilo, out of nothing essentially, because with smart contracts now you have the possibility to do real estate transactions, you could do stock settlement, you send money to a friend in England, you can do almost anything with that. That is exciting because that essentially utilizes the blockchain concept.
You can make everything faster, you can make it cheaper, you can make it more efficient. We just got all excited about moving stocks from settling 2 days to 1 day. This is 2024, it's still taking a day. ETH could make that effectively instantaneous and effectively free. So I agree that there's a lot to be excited about in terms of what Ethereum, tokenization can do to improve finance.